Everybody. Good afternoon. Thank you for joining us today for this Lunch and Learn, Small Business Boot Camp Lunch and Learn. I'm Robert Theobald, Small Business Ombudsman and Vice President of Small Business Services. And glad to have you with us. One thing, if we could all, while we're getting started, everybody place in the chat where you're tuning in from. I always like to see where we have our attendees participating from throughout the state or from other states. Casa Grande, Mesa, Peoria, excellent. Anthem, Sanders, Phoenix, Tucson, Bullhead City. All right. Spreading out. Globe, Glendale, Tempe, Dolan Springs, Chandler, Sahuarita, Casa Grande, Phoenix. All right. We have representation from all over the state. Well, we appreciate everybody being here with us. If you're new to any of the workshops and the boot camps that we do, we do these with our community partners. This is one of our rare Lunch and Learn workshops. We normally host the boot camp every Tuesday morning. The Small Business Boot Camp is a weekly webinar series that we host on Tuesday mornings from 9 to 10 a.m., where we bring in community partners. And then we also do some workshops and lunch and learns and other special session webinars, depending on the needs and the things that are going on. So today's is a lunch and learn workshop, and we're glad to have our partners at the IRS with us. Also, those that are new to the boot camp, we record all of our sessions, both the webinars and the online workshops, and put those in our content library. We host those in our content library, and you can go access those at any time, review the content that's in there. We include the slide decks as often as possible, so you can download the slide decks if that's something that you're interested in. So it's a great resource available to you on the Small Business Bootcamp webpage at the very bottom of it. So before we get started with today's topic, we want to look at some of our upcoming webinars. We have a great lineup coming up. We have Motivate Your Prospects to Take Action with Persuasive Language. Really help driving home how to use the proper language to drive sales. So we're looking forward to that session on this next Tuesday. Then the following week, we have Your Growth Formula, Getting from Vision to Execution. And then the week after that, one of our great sessions, it's an awesome session, is How to Avoid the Top 10 Legal Mistakes That Can Destroy Your Business. So hopefully you can join us for one of those. We also have coming up on Wednesday, February 14th, we have an in-person only workshop in partnership with the Phoenix Business Journal, Setting Up Your Business for Growth. We're going to look at some presentations from Wells Fargo and Blue Cross Blue Shield of Arizona to look at various information, various things to think about and plan for as you're getting ready to grow in 2024. So great session. The registration link for that is through the Phoenix Business Journal, and it will be hosted here at the Arizona Commerce Authority. So with that, we are going to quickly jump into today's session. We have Lisa Novak. She's the Senior Stakeholder Liaison for the IRS, and she's local here, and she's a great friend to small businesses. So Lisa, I'm going to stop sharing my screen, and while Lisa's getting set up, I do want to remind everybody, we know you're going to have questions. We want you to put those in the Q&A. You'll see what looks like two little text boxes at the bottom of your screen. It says Q&A. Place them there, so that way we can use the chat for some interaction if need be. But when you place those questions in the Q&A, it helps us track them better and be able to respond better to those. So with that, Lisa, it is all yours.
Okay, thanks, Robert. I think that Faith is going to be sharing this presentation for me. All right, awesome. So I want to apologize, everybody. I've had some technology gremlins this morning, and I've had to kind of switch my whole computer over to use a personal computer to join this. And I do have some challenges with my camera on my personal laptop. So I'm not going to turn my camera on in case there's some other gremlins that want to come in. But I want to thank everyone for inviting me and actually for joining in on this webinar today. As Robert said, my name is Lisa Novak. I'm a Senior Stakeholder Liaison with the Communication and Liaison Division within the IRS. Just a quick little bit about myself. I've been with the IRS since 1987, so I'll let you all do the math, but it's a really long time. I started out as a tax auditor. I eventually got into the education and outreach arm around 2001. So I've been around for a while and gone over a lot of this information with folks. So, I'm aware that as a small business owner, there's a lot for you guys to know, not only just tax rules, but you have to be aware of other guidance as well. So we wanted to bring you this information. It's always good to review some of the basics, even if you have a tax preparer or someone assisting you. And it's really important to ensure that you're filing your taxes correctly. Not only just to ensure that you only pay taxes on what you're required to pay, but you also want to reflect an accurate financial picture on your tax return, especially if you're going to be seeking loans and things like that. So today I wanted to share some information about how to avoid some of the common tax pitfalls that small businesses make. And I'll also share some resources with you that you can refer to later. We just kicked off a new filing season on Monday. It's time for everybody can start filing their returns now. So I did want to share a few of the newest messages that we have with you that maybe you might find helpful as you get ready to file. And at the very least, it's good for you to know where to go to get some of the latest and greatest information. So hopefully you'll find the information here both helpful and informative. So Faith, next slide, please. So this slide just shows you the agenda that we're going to follow today. Some of the topics that I'm going to cover on, some of the top tax mistakes. It does not also include some of the other topics that I'm going to throw in at the end. So I have a lot to cover. I'm going to just go ahead and jump in to all of these topics on the next slide. So let's go ahead and begin. So one of the first tips to help you avoid tax trouble would be to make sure that you're keeping good records. The IRS does not require you to keep your records in any certain way. You're going to use whatever record keeping method that works for you, that you could work in your schedule. But you want to make sure that whatever method you use provides you with all of the information that you need to correctly calculate your income and figure your deductions. So for income, you really need to make sure that you've got proper record keeping methods and internal controls to make sure that you're keeping track of your income and that you're going to be able to accurately compute it. And I'll talk I'll talk very soon about income. But on the expense side, you want to keep things like your canceled checks, your receipts, invoices, any other evidence of expenses that you paid. One of the probably most common questions that I get asked when I go out and talk to small businesses or anybody in general is, how long do I need to keep my records? And that might be one of the questions you all already had. The general rule of thumb, well, in general, you have to keep your records for as long as they're important for any tax law. But in general, it's usually the later of either 3 years from the return due date or the date filed, or 2 years after the tax was paid. But you don't want to just go ahead and start destroying records after 3 years, because there are certain situations where you want to, depending on the way you keep your records, you're going to want to keep certain records for a bit longer. So for instance, maybe you bought some equipment that you're going to be depreciating over a period of time, and that equipment has a lifespan for it. So if you retire that equipment or if you later sell that equipment, you're going to need that documentation later on. But those are the general guidelines. So if you've got, records from 10 and 20 years ago, it's probably safe, but you might want to look through and see what you got in there. Next slide, Faith, please. Okay, so another way to avoid tax trouble is to make sure that you're reporting all of your taxable income. And it's important to know what types of income are considered taxable. And really, all income is taxable unless the law specifically excludes it. So you can get income from your business in a lot of different forms. It can be cash, checks, credit cards. There's payment apps now, which I'll talk a little bit about a little bit later on. Also, the exchange of property or services, and that's called bartering. And I think a lot of people don't think about that, but it is a non-cash transaction that would be taxable. So in this situation, well, let me give you a little bit of an example. So let's say that you are a dentist and you call a plumber to fix some plumbing in your home. And when the plumber comes out, he finds out you're a dentist, he says, hey, I need some dental work done. And you all agree that you're going to just exchange services instead of cash. So the value of the plumber services would be includable in your income. And same for the plumber, he would have to include the value of the services you provided to him in his income. So, these are the kind of things that you want to consider. I think the bartering probably happens a lot more out there than people realize. But this just kind of shows you that it's really important to come up with a reliable record keeping system just to make sure that you're properly and timely accounting for your income. Next slide, please. Okay, so this is another way to avoid tax trouble, and it would be claiming personal expenses as business expenses. So you always kind of have to watch out for these little nuances. So you really are only allowed to claim your ordinary and necessary business expenses. An ordinary expense is one that's common and accepted in your trade or business. It's something that probably everybody is going to incur an expense for. A necessary expense would be defined as one that's helpful and appropriate for your trade or business. It doesn't necessarily have to be indispensable to be considered necessary, but it should also be kind of a reasonable expense. It shouldn't be that extravagant. So if you keep your business and your personal records separate, it's going to go a long way to kind of help avoid this common mistake. And especially keeping a separate business bank account and a personal bank account so that you can make sure that you keep everything separate. That's going to help a lot. Now, there's a lot of examples that I could go over as to some of the areas where we see more mistakes. But the slide shows you the top 3 expenses that are really looked at very carefully by IRS. The first one is the home office deduction. And nowadays we have lots of people working at home, especially since the pandemic. I think a lot of people have settled into working out of their home. So if you have a home office, just remember that personal expenses are never allowed as a business expense. Your business expenses have to be kept separate when you're dealing with the home office. Now, one way that kind of help you in this area would be back in 2013, the IRS issued what they call a simplified option to use when claiming the home office deduction. And what this is if you have a room that you use regularly and exclusively for business and you meet all the qualifications to be able to take the deduction, you could take a standard deduction of $5 per square foot of that portion of the home used for business with a maximum of 300 square feet for this deduction, which means that you would be allowed a $1,500 deduction. There's a lot of benefits to claiming the simplified option. For instance, you don't need to allocate your expenses between Schedule A for things like home mortgage interest and real estate taxes, because if you claim the actual expenses, you're going to have to allocate between what's allowed on Schedule C versus what's allowed on Schedule A. Another benefit is there's no depreciation deduction. That's an extra calculation that you have to do, and you have to keep it going year after year. And then there might be recapture of depreciation, like if you sell your home. So this does make the simplified option a little bit more attractive when folks are going to claim this deduction. So some of the requirements for claiming office in the home, there are two basic requirements. You have to use that portion of your home regularly and exclusively, and it has to be your principal place of business. So regular and exclusive use, that would be, you have to have this room set aside that's strictly business, and that's what you use. You know, you're not going to have a separate office somewhere off site that you can go to as well. So let's say that you have a room set aside, maybe you use your third bedroom, and there's a guest bed in there in addition to everything else that you might keep in there that's business related. If that guest room is available for guests, if you have, you know, friends coming and spending the weekend or family members coming for the holidays, there really is not exclusive use of that room. So you have to watch out for that. The other requirement is that it be your principal place of business. So let's say that you are a salesperson who works out of their home to make sales calls and set up appointments and keep records, and maybe you keep some samples or some inventory in that room, and so it's regular and exclusive use. But let's say you have to go out and meet clients at their location, you would still meet the requirement in most cases for principal place of business. So you want to look into those requirements before you can claim the home office deduction. If you don't opt for the simplified option, you're going to be allocating your expenses based on the total square footage, a percentage of the total square footage of your home used for business. So there is a lot of like calculation. There's a lot of opportunity to mix some personal expenses in there with the business expenses. So for more information, you can go to publication 587, which is about business use of your home, and you can learn all about it. That information is available on irs.gov. And I'll be referring to that a lot. So you can usually find pretty much most of what you're looking for on our website. The next area that IRS looks kind of closely at is frequent business vehicle use. So it doesn't mean that you shouldn't claim a business vehicle deduction, but you want to make sure that you have a very detailed log that's going to show the date of your mileage, the destination that, you know, that it was business related, and the mileage for each trip. There's a lot of good apps right now that help you do that. I know back in the day, I used to have to keep a little steno book with, you know, a pen and pencil right there and write everything down. One of the greatest areas of misunderstanding, I think, is a lot of people think that they use their car 100% for business use. Well, you know, my wife has a car, my husband has a car, and we use that when we go out. It's pretty hard to meet 100% business use of a vehicle, because if you stop off to pick up your dry cleaning or the grocery store on the way home, those are personal commuting miles. If you have to pick up your child from school, or maybe you stop at their sporting event on the way home, those are personal miles. So you really need to make sure that you're determining what your total miles driven for the year, as well as then what business miles were included in that total mileage. Now, in most cases, you can claim either a standard mileage rate, or you would claim a percentage of the actual expenses you incur in operating that vehicle. So, you know, repairs, gas, tires, all that kind of stuff. If you do your actual expenses, you could only take the percentage of business use. For 2023, the standard mileage rate was 65.5 cents a mile for business related miles. For 2024, it has gone up to 67 cents per mile. So it really is a lot easier to claim that standard mileage rate than to keep all of your receipts and documentation. But that's a personal choice, and you can talk to, if you have a tax professional, you can ask them what their advice is on that. Finally, the third item that's listed on the slide is business entertainment or travel and entertainment. Sometimes if you're self-employed, it's a little tempting or easy maybe to claim lots of meals and travel on your Schedule C. So you can avoid trouble by claiming only the proper expenses that are allowed by law. And there's a lot of little nuances in there. But if you're claiming a business-related trip, like a travel to another state or something along those lines, you really want to make sure that you keep detailed records of receipts and who was there and the event specifics. If you had a convention that you attended maybe in California, maybe your family came with you to go to Disneyland, that portion of that travel would not be deductible. So you want to keep kind of those things in the back of your mind. As far as expenses for meals and entertainment, there have been some changes to that over the years. Under the Tax Cuts and Jobs Act, entertainment expenses are no longer deductible. So, anything to constitute entertainment or amusement or recreation, those would not be deductible. So, I know when I used to audit, people claimed country club dues and, they'd get courtside tickets to a basketball game or, that kind of stuff. Those are not deductible anymore. The meals expenses, those have been changed where you can only deduct 50% of the cost of business meals as long as you or your employee are present. And the other requirement is that the food or beverages can't be considered lavish or extravagant. So just you need to watch that. Next slide. Okay, so this slide really applies to anybody and everybody, not just business. You always want to make sure you're reviewing your tax return for accuracy before you file it, especially if you're a do-it-yourselfer, especially if you're filing by paper and doing everything the long way without using software. Some of the common errors would be people forgetting to put their social security number on, or maybe transposing numbers. They're calculating the tax incorrectly. There could be some computation errors for a number of different topics, like the earned income credit, the standard deduction, that kind of thing. Sometimes people put things on the wrong lines. So you really want to watch out for that. And well, I'll talk about that in just a minute. Hang on. And math errors, you got to watch out for, just addition and subtraction, basic errors. So you always want to watch that. You always want to review your entire return, because any errors could delay the return processing, which would in turn, if you're expecting a refund, would delay that refund. So you want to make sure that you understand everything, that you're comfortable with the accuracy of the return before you sign it. And speaking of that, don't forget to sign the return. That is another common mistake, believe it or not. Okay, next slide. All right, again, this is all for all filers, not just businesses. You want to make sure that when you're ready to file your return, you consider using e-file. So some of those errors that I talked about on the previous slide, a lot of those are going to be taken care of through electronic filing. And so that could especially help cut back on those math errors. When you file a paper return, when you send that to the IRS, somebody has to take that paper return and rekey in all that information that is on your paper return. So with electronic filing, there's less of a chance of error of somebody having to key things in again and, maybe incorrectly. So another benefit to e-filing is especially if you elect direct deposit, you'll get your refund faster. I think, well, I don't think anybody's gotten refunds yet since filing season just started on Monday, but generally it's within 10 days that money is going to be in your bank account unless there is some other issue with your return. And with direct deposit, you can actually split your direct deposit refund into as many as 3 different accounts. So if you kind of want to be a forced saver and say, okay, deposit, 1,000 to my checking account and 2,000 to my savings account, you can have that done automatically. If you owe, I think a lot of people don't want to electronically file when they owe, but you can actually file your return early and you can delay making that payment, especially if you go through some of the e-pay options. So we've got several different payment options that you can elect. You can usually pay through the electronic filing program, but you could actually go to irs.gov to find out what the other electronic options are. You should also make sure that if you go to a tax return preparer, they offer e-file, because any paid preparer who prepares and files more than 10 tax returns has to file the returns electronically. They are allowed to paper file in certain circumstances if the client is insistent on doing that. So, but IRS has really safely and securely processed more than 1 billion individual tax returns since it started back in 1990. So it is a very safe and secure system. So don't let that scare you. Okay, next slide. All right, so one of the things that I always try to make sure I talk to people about when I go out is talking about tax scams, identity theft, things like that. One of the sayings, if it's something seems too good to be true, it probably is. This applies to a lot of tax advice too. There's some folks that are out there promoting what we call abusive tax schemes that are really designed to help you evade taxes. They might, convince you to take some false deductions, or they might tell you that if we set up this trust, this is a good way to avoid taxes. And so, if something sounds too good to be true, you might want to check it out because it probably is. The other thing that I want to warn you about is scam calls and scam emails. Those are very prevalent. Please, please, please use caution. If you get a phone call where somebody identifies themselves as being from the IRS, in most cases, before IRS contacts you, you're going to get a letter through snail mail. And most likely you might have gotten more than one. So if you get a call like that, you probably already know there's something going on. But if you aren't expecting anything, when somebody calls you, you can tell them, I'm not comfortable with this. I'm going to hang up and call the IRS directly to find out what's going on. And that way, if you do it that way, if the caller is legitimate, they're going to know what you're doing and why you're doing it. If they're not legitimate, you're giving them the message that says, hey, I don't believe you. Don't call me again. So hopefully that would take care of it. But there's also, a lot of phishing emails going on out there pretending to be from the IRS. They might send you an email saying, oh, you're due a refund. If you click on this link and provide us with your information, we will send you a check for $436 or whatever. So you really want to watch out for those kind of things because they're trying to trick you into opening a link or an attachment if you give them all of that information, then they have all of your personally identifiable information, and they can do bad things with it. They can even file a fake tax return using your information, and then it causes all sorts of trouble for you when you go to file your own return, because IRS is going to say, no, we already have a return filed. So that's usually a good indicator that there's some kind of identity theft going on. So you can stay advised as to those types of scams and schemes that are going on. IRS every year issues what's called the Dirty Dozen. They usually do this in a news release, and that highlights, some of the scams and schemes that you might encounter during the year. We also have a tax scams consumer alerts page on irs.gov that will help you recognize some of these scams as well. I also included a link to how to know it's really the IRS calling or knocking on your door. These are the kind of things that you want to look at before you get a scam email or before you get a scam phone call, so that you know not to fall victim to it. I also encourage you to make sure that you're having discussions with, at the very least, with your family. Maybe you have an elderly parent or grandparent that is on the internet. Make sure that they're aware of, some of these scams that are going on. I know I give these talks all the time, and I failed to inform my own mother. She didn't fall victim to a tax scam, but she fell victim to another scam. So it is quite disheartening when that happens. So make sure that you're talking to folks about that. The other thing is threatening impersonator phone calls. A lot of times somebody might call, and they can spoof phone numbers now, so it'll look like it's a legitimate IRS number, but they might try to trick you into paying a non-existent tax bill. And a lot of times they use a tactic where they're, trying to make it seem like you have to do this right now, or you're going to be in trouble. We're going to send the police after you, or, something along those lines. So you really want to watch out for things like that. You watch out for fake charities. There's social media scams. IRS does not do business via email, text message, or social media. So that's a really good clue if something comes along that looks like it's from the IRS. Senior fraud is really big. They're big targets of these scammers. And also scams targeting non-English speakers. So just be aware and take a look at some of these resources. And also know that businesses can be targets of these scams as well. So you want to make sure that you check out the business section that's on our identity theft page. That would be on irs.gov/identity theft. So take a look at this information, when you have a few minutes, and I think it'll go a long way, and some of it might surprise you as well. Next slide. All right, so we want to make sure that people are very selective when they choose their tax preparer. I often equate that to choosing a heart surgeon. You don't want to just go to anybody who hangs a shingle up at your corner and trust them with your taxes. You want to make sure that somebody has the qualifications to do your taxes. Most return preparers do provide honest service to their clients, but just like any other business, there are some who might prey on some unsuspecting taxpayers. So if you choose to pay someone to prepare your return, you want to remember that you are legally responsible for what's on your return. So you would still be required to, pay any deficiency, or you'd be subject to penalties and interest, even if you paid somebody else to do it. So you want to really be careful with that. You also want to be aware of what we call ghost preparers. And these are people who prepare a tax return for payment, but they're not going to sign it and they're not going to electronically file it. They'll just give it to you to file. You want to use some caution when you run into somebody like that, because oftentimes they have not prepared your return totally correctly, I guess I should say. So watch out for ghost preparers. We do have a tool on irs.gov that can help you find somebody who is credentialed and recognized by the IRS. We do require tax professionals to have what's called a PTIN number, or practitioner tax identification number. You can go to the IRS directory of tax return preparers. The link is shown on the slide there. And you can look for somebody by their credentials. So if you want a CPA, or if you want an enrolled agent, or we do also offer what's called the annual filing season program, otherwise known as AFSP, where they take a test every year to prove that they have the knowledge to prepare tax returns. So you can go to irs.gov/choose-a-tax-pro and you can sort it by, your zip code and how many miles you want to go and what the credentials are. Next slide, please. All right, so this slide just shows you one of our publications that highlights a lot of tools and resources that are helpful for small businesses. So you can either use the keywords that are on this publication to search on irs.gov for some of these links, or just go into irs.gov and type the keyword business, and you'll be able to navigate to the tax information for business page. You'll see a lot of different publications, small business tools. We've got the Small Business Self-Employed Tax Center webpage. Lots and lots of different information. You can find information there for starting a business, operating a business, closing a business, things that you'll need to know. We've also got the IRS video portal, where we usually archive our webinars within usually a couple weeks after we offer a webinar. And so you can go in and view a variety of different topics. If you go to irsvideos.gov, we've also got online learning and educational products. Things like, we've got a tax calendar desktop tool, so you won't miss any of those important due dates. So there's a lot of different resources here for you. There's even a virtual small business tax workshop that you can access from here as well. So check out all of that great information that's available for you. And then this slide just refers to some of the publications that you can refer to for the topics that I've discussed already. So record keeping, the travel, entertainment, gift and car expenses, business use of your home, those sorts of things. There's a link to tax scams. There's a link to the Dirty Dozen scams if you want to find more about that information. Next slide. Okay, great. Thank you. All right, so the next topic that we're going to talk about is worker classification. So this is another area where there does seem to be a lot of misunderstanding. So if you have or plan to hire workers, you're going to want to make sure to classify them correctly. Next slide. This slide highlights one of our publications, which is Pub 1779, that you can access on irs.gov. Kind of just spells out some of the requirements. But, if a worker is an employee, then the employer is responsible for withholding income tax and the employee's portion of Social Security and Medicare tax from what they paid to the worker. And then they're also responsible for paying over the employer's portion of Social Security and Medicare tax, as well as the federal unemployment tax. So there are some additional expenses that you'll incur if someone if someone is classified as an employee. Whereas on the other hand, if somebody's classified as an independent contractor, the business isn't responsible for any payroll taxes. So sounds like a way to say, well, I don't want to incur all those expenses. I'm just going to treat everybody as independent contractors. And that's not the way it works. There really are laws that determine whether that worker is an employee or an independent contractor. So the first step that you're going to want to take is to properly classify the worker. Next slide, please. All right. So one of the first things that you're going to look at is the relationship of the worker and the business. You're going to need to consider all information that provides what they call evidence of degree of control and also the degree of independence. And so when you're looking at all these categories, not just one or two factors is going to come into play. All right. So you can't just pick and choose one or two and say, yeah, no, they're going to automatically be an independent contractor. So we've got three categories of evidence. It's behavioral control, financial control, and the type of relationship of the parties. So what is behavioral control? So you want to look at things like, does the business control or even have the right to control what the worker does and how they perform the services? So are you telling them where they need to report every day, what time they need to be there, what their working hours are? Is there a specific uniform you require them to wear? Things like that. Do you have control over the things that they are doing? What kind of instruction do you provide? Do you provide them some kind of on-the-job instruction on how to do things? Are you evaluating them? Are you training them regularly? Those are some of the factors that you want to look at for behavioral control. The next area you want to look at would be financial control. So are the business aspects of the worker's work actually controlled by the business? So these would be things like, do you reimburse their expenses to them? Who's providing the equipment, the tools, and the supplies that they need to do their job? In most cases, if you're subbing work out to, a subcontractor, they're going to provide their own equipment, tools, supplies. If you're providing all of that for your worker, it's a pretty good indication that they're going to be classified as an employee. Another thing that you want to look at is, could they face a loss on the job? So does somebody like bid on the job, and then let's say maybe it's a construction job and the price of lumber has gone up, and so they're not necessarily going to make a profit from that job. They have a chance to face a loss on that job. The other thing you want to look at is, are they holding themselves out for services to others? Or do they just primarily work for you? Now, that doesn't mean, does my worker have a second job? It means, do they kind of have their own business thing going on the side? So you want to look at those things. Also the type of relationship. So are there written contracts? And a written contract alone that says they agree to be treated as an independent contractor isn't enough. That oftentimes we've seen these where somebody signs a contract and says, yes, I agree. They love getting those paychecks without any withholding taken from them. But when they actually sit down to do their taxes and find out that they have to pay taxes, they're not happy. And then they come back and say, oh, no, I really am not supposed to be an independent contractor. Another thing to look at is, are you providing any employee type benefits? So is there a pension plan that you offer? Do you offer them insurance, paid vacations, things like that? And then also, is this relationship going to continue, or is this just a one-time job that, this contractor would be completing for you, something along those lines? So those are the things that you really need to take a look at when you're going to hire a worker and how you're going to treat them. Next slide. So this slide shows you some additional resources that you can go to for some additional information on worker classification. The publication 15A that's listed there has some great examples that are specific to certain industries. The second bullet from the bottom there is actually going to take you to some real life submissions of the form SS8 and what the outcome was. And so the SS8 is what either a worker or a business can send to the IRS to help make the determination on whether that worker should be classified as an employee or independent contractor. So these are the outcomes of some of the submissions. So you can always kind of get some information from there as well. Next slide, please. Okay, how many of you know that you can set up your own account on irs.gov to access your own information? You don't have to necessarily call the IRS and sit on hold and wait for somebody to give you the information. We are really encouraging you to sign up for your individual online account, especially before you might need any information from it. You can get familiar with it, learn what's available, and that'll help you if you think you might have to call the IRS, and you can just sign into your online account and get the information that you need. One of the reasons why I want you to sign up early is you do have to go through an identity verification process before you can sign up, because we want to make sure that there's no fraud or somebody, pretending to be you. So you do have to go through a system called ID.me. If you already have an ID.me account for some other systems, that's going to work to your advantage. But you really want to give that a shot and sign up online. So what can you do with an online account? So you can view balance details. If you've got a balance due, you can take a look at your payment history, or if you've got any payments scheduled or any pending payments. You can see all that, as well as information from your most recent tax return. If you need to set up a payment plan, you can do that right through your online account. So there's a lot of different things that you can do here. You can get a tax transcript if you need that. And then this actually started as an option for tax return preparers, because if they need to represent you and get a power of attorney, a tax return preparer can actually prepare a power of attorney form in their Tax Pro account, and then it'll go to you for you to electronically sign it, and you can submit it to IRS, and it's processed almost immediately. So there's a lot of benefits to signing up for your own online account, and they continue to improve it and add more and more features. So take a look at that if you haven't already. Next slide. They've just started rolling out what's called the business tax account. And so this is for sole proprietors, partnerships, and S corporations. And folks can view their tax information and do a bunch of different things with the business tax account. It is just starting. It's kind of in its infancy form. So right now, if you're a sole proprietor with an employer identification number, you can view any business balance dues or your business tax records. If somebody is part of a partnership or an S corporation, if there's an individual shareholder who has a Schedule K-1 on file for certain eligible years, you'll be able to use the business tax account to view a business tax transcript or the balance due and things like that. But stay tuned, because they will be rolling out more features for this. If you have your individual online account already set up, you can use the same login. You can just go to irs.gov/business account. So I really encourage you to take a look at that. Next slide, please. And I'm going to really speed it up here because I only have a few more minutes left, and I know I have quite a few slides left here. So the identity protection PIN, this is something that you want to look into too. As I mentioned, the scammers can sometimes get your information, file a tax return in your name, and it'll create a whole bunch of problems because the IRS then has to resolve it, and it would delay the processing of your refund, most definitely. So you can apply for what's called an identity protection PIN number, and it will protect your federal tax account from identity theft. So you have to include an IP PIN when you electronically file. You'll get a new IP PIN every year. You can just sign back into your account and get your new IP PIN before you file a return. So I encourage you to look at this at irs.gov/IPPIN, IPPIN, and find out more information about that as well. Next slide, please. So back in 2022, IRS stopped sending automated reminders for people to pay overdue tax bills because things were backed up. Things were crossing in the mail. It was making taxpayers really upset to get these reminders. So IRS halted them. But even though they stopped the reminders, they still owed the tax, and they also had the failure to pay penalty and interest that continued to accrue on these tax bills. So IRS is actually starting to send these notices out again, but they're taking steps to waive the failure to pay penalties for eligible taxpayers for tax years 2020 and 2021. So they'll be issuing a special reminder letter. It's going to alert the taxpayer of their liability, tell them easy ways to pay that, and they're going to tell them the amount of penalty relief if they applied some. So we do urge taxpayers who can't pay their full balance to view irs.gov/payments to make some arrangements to resolve their bills. So keep that in mind if you have any past due balances. Next slide, please. I just wanted to mention, I have several slides on here and I'm not going to really go into them too much, but there's a Form 1099-K that people will get if they meet certain thresholds of amounts, if they accept payments through credit cards, if they have a third-party payment network. So if you think things like, if you accept payments through Venmo and Cash App and PayPal and things like that, the IRS legislation changed the reporting requirements. So previously, you would not get a 1099-K in these instances from these third-party payment networks unless your transactions were over $20,000 in 200 transactions. The American Rescue Plan lowered that threshold to say you're going to get a 1099-K for total gross payments of more than $600 for the year, regardless of the number of transactions. However, they have delayed the implementation of this new threshold for the last couple of years, and they did announce that this year is going to be another transition year. So you might get a 1099-K, you might not know what to do with it, but there is information on irs.gov. If you go to, let's forward a couple slides, Faith. Yeah, so irs.gov resources, go back one more. So there, you can go to irs.gov and just type in 1099-K. Forward one more, please. You'll find some frequently asked questions about it. Here's some other resources for people who might be starting out in business, and especially for the gig economy. So, think Uber drivers or DoorDash delivery people. People might be really surprised at, getting this 1099-K. Now, keep in mind, though, if you've got friends and family transactions, those should not be reported on a 1099-K. So if you get a 1099-K and you're not using that app for business, there is information on irs.gov that'll tell you what to do in those instances. Next slide, please. Okay, if you were like me, I got awfully tired of turning on the TV, the radio, or looking on the internet and finding out about seeing an ad for the employee retention credit and all the money that you're missing out on, and you would be eligible for this. So this is one of those messages that we're emphasizing right now. There were a lot of scams going on surrounding the employee retention credit. In September, the IRS said, look, don't send us anymore. We're not going to process anymore. We have thousands and thousands of these that we need to slow down, take a look at. They sent some for audit. They sent some for investigation by criminal investigation. So we really need to make sure that you know the qualifications if you were going to apply for the employee retention credit. Let's go to 2 more slides. Yes. So there's a couple of relief, nope, there you go. A couple of relief programs available. So let's say that you filed an IRC claim and you go to your tax return preparer this year because you went with a promoter, and your return preparer says, no, you're not eligible for that. There is an option for you to be able to withdraw your claim if it hasn't been processed or paid by the IRS. Also, if it has been processed and it has been paid and you've gotten the money and it's deposited and everything, but you go to that preparer and they say, no, you really shouldn't have gotten that money. There is a program called the Voluntary Disclosure Program for IRC that you can register for. And if you're eligible, you would only need to pay back 80% of that credit that you received. And there would be no interest or penalties unless you're not able to pay that full 80% at one time and you need an installment agreement. So this was done because those promoters were charging a lot of money to prepare these returns for people. Some were up to 20%. And these credits, some of them equaled millions and millions of dollars. So they really took advantage of this program. So if you or anybody you know is in this type of situation, the resources are shown here on the slide for you. Okay, next slide. And I did it. I came in right at 1 o'clock. Robert, do we have time for questions? Or if we do not, my email address is shown on the bottom of the slide. You can always send it to me.
Yes, we have time to answer some questions. We got a few questions in there that we can go through.
Okay.
So the first question is an EIN required for a home-based business that makes less than $5,000? Is there a free way to obtain an EIN?
Okay, so I will go with the second question first. Yes, you can go to irs.gov and apply for an EIN online. So that's free. Do not fall for any of those pop-up ads that say they can help you get an EIN faster or easier and you'll pay us X amount of dollars. That is a free service offered by the IRS. An EIN isn't necessarily going to be required. It would be if you're going to have employees. Oftentimes, if you're going to open a business bank account, the bank requires you to have an EIN for a business bank account. So those are just a couple things to consider.
Excellent. And then the next one is, it says you can only write off vehicle expenses, maintenance, travel, gas, etc., or mileage, correct?
That is correct. You can do either the standard mileage rate, which would be writing off just your mileage, or you can write off your actual expenses, which would be a percentage of the business miles that you drove. So, if you drove 20,000 miles total, and 10,000 of it was business related, then you could deduct 50% of those actual expenses.
Okay. If you have a lease vehicle for the business, are all expenses related to this vehicle tax deductible?
So it's the same. It's going to be based on the percentage of the miles if you're taking the actual expenses, but you can claim the standard mileage rate on that as well.
And then where can I electronically file 1094B or 1095B forms? They say I have to e-file, but I do not see how to e-file these forms unless I hire someone.
So I'm not familiar with 1094 or 1095B forms. If you would like to send me an email to my email address, I would be more than happy to address that. I would look into that for you. I'm going to put my email address in the chat.
All right, says this last one, and then we'll go from there. It says, how does one handle married filing jointly and one of the couple passed away during the past year? What all is necessary to handle the situation?
So Bob, I'm going to ask you to go ahead and send me an email on that question as well, and I can point you to some resources that'll help you with that.
Excellent. Well, those are all the questions we have for now. Or we like to get Lisa on every year to kind of talk about these things. New questions come up, rules change, and we appreciate Lisa for her time and being with us. Sorry for some of the technical difficulties, but presentation went well, and we're glad to have everybody with us for this Lunch and Learn. So keep an eye on the emails for upcoming webinars that we host and workshops. Until the next one, we'll see you then. Have a great day and a great rest of your week. Thank you.
Thanks, Robert.